Are you ready for the Hollywood Chambers Accelerate?
Coaching sessions that help accelerate your business growth.
We break down complex issues in a short format.
From the principles of finance to marketing strategies that will propel your organization.
Learn from industry experts, tastemakers, and business leaders.
Gain knowledge and resources that foster growth and innovation.
The Hollywood Chambers Accelerate.
Available on Apple Podcasts, Spotify, and all other streaming platforms.
I actually came into the banking industry back in the mid-90s from the payroll industry. I used to work for a payroll company. And the first thing I noticed when I came to banking was no one spoke to business owners in their own language. They only spoke in bankerese, and business owners never knew what the bank really wanted for them to get a loan. So that's kind of how I created my career in the banking industry, is doing these kinds of events to talk to you in your language so you understand what the bank is looking for and get more success in actually being able to get funded. 10 years ago, I bought one of my clients and became a business owner. So like you, I have struggled through COVID, through lease negotiation, through rent, all of the kinds of things that you had to go through, I've gone through as a business owner. And that's actually how I started in supplier diversity. But today what we're going to talk about is SBA, the Small Business Administration, and the types of loans and lending programs and guarantees that help small businesses get funding. So we're going to go right into it. So what is an SBA loan? An SBA loan is simply a commercial loan to a business that is unable to obtain a loan on reasonable terms through conventional channels. The SBA allows a bank to have flexibility in its underwriting, its term, its rates to allow a business, to get a loan that they would normally decline without the SBA guarantee. What are the three questions that a bank needs to know when you come in to ask for a loan? Number one, how much money do you need? Number two, what will you use the money for? And number three, how will you demonstrate that you can pay the money back with interest? I'm going to take these questions one at a time. Number one, how much money do you need? The answer should never be, how much money can I get? Right? You need to determine how much your business needs to borrow, what you're going to need over the next 12 to 24 months, and we would like you to categorize it in money that is going to be paid back within a year and money that is going to be paid back over 12 months. Number two, what will you use the money for? We need to know the actual use for the money borrowed. So we need you to categorize and tell us what you're going to spend your money on. And it could be multiple things. It doesn't have to be just one. But we see a lot of requests that just say working capital. We need it broken down even further. Inventory materials, production, sales, marketing, website design, purchase of real estate or equipment, contract or PO financing, expansion or business acquisition. So we need to know what that money is going to be used for. And number three, how can you demonstrate that you can pay that money back with interest? The bank is looking to see how you're going to pay our loan back, from historical revenue, which is why we take 3 years tax returns to see what you've been earning, through projected revenue over the next 12 to 24 months, especially when you're coming to a business acquisition or an expansion or a new line of business. Contract or purchase orders, so if you're financing contract or purchase orders, that's something that we want to see, and sometimes it's a combination of those three. Some popular SBA programs. The most popular is the SBA 7A program and then the SBA 504 program. We'll take them one at a time. So the SBA 7A program is the flagship for the SBA, and it can be used for a multitude of things. The purchase of land or buildings, construction, tenant improvements, the purchase of equipment, machinery, furniture, fixtures, supplies, materials, long-term working capital, including the payment of accounts payable and or the purchase of inventory, short-term working capital needs, financing against inventory and receivables, the refinance of business indebtedness that is on unreasonable terms, or to purchase an existing business. What is the structure of a 7A loan? So on the real estate side, we can loan up to $5 million. We can do up to a 25-year fixed rate, fully amortized loan, and up to 93% financing. On a 7A business term loan without real estate, we can do up to $5 million. The maximum term on those loans is 10 years, fixed rate, fully amortized, and the use of proceeds goes back to we can do partner buyouts, working capital or expansion, equipment, tenant improvements. There's multiple uses as long as it's a valid business purpose. So let's look at the term loan a little closer. So again, it's up to $5 million, 10 years. We're going to talk about business acquisitions specifically because that's where a lot of money is being spent and a lot of loans are being done with the SBA. As baby boomers start to retire, people are selling their businesses or basically just wanting to sell them to the employees or to partners. So we're seeing a lot of business acquisition activity. We can do 90% financing plus the fees. So what happens is we can do a 90% bank loan and 10% down from the buyer. But in the business acquisition, we can also do, and this usually happens with a friendly transaction, employees that are buying, the retiring owner or a friend or a family member that's buying the business. So we can still do that 90% bank loan, 5% down cash from the buyer, and then 5% seller carryback on full standby. Full standby means basically that the seller will not get any payments on that loan, that principal or interest payments, until the bank loan is paid off. The benefit to the seller is that they don't get all the money in 1 year, so they're not paying taxes on all of the money in 1 year for their business sale. The 504 program, so this is on fixed assets, primarily commercial real estate. So you can purchase land, existing buildings, the purchase of improvements to those buildings, grading, street improvements, utilities, parking lots, and landscaping, the construction of new facilities or modernizing, renovating, or converting existing facilities, the purchase of long-term machinery and equipment. So this is for real estate that you're purchasing and that you own. This is what you would use a 504 loan for. You cannot use a 504 loan for working capital, inventory, business acquisition, or speculation or investment in real estate. So let's look at a typical structure of an SBA 504 building purchase. So for a $10 million building purchase, the bank would do a $5 million loan, which is 50% in first position. The SBA would do a 40% loan. They would be in second position, and then the owner would come up with 10% down. 50, 40, 10 is the typical structure. Who is qualified for a 504? Most private for-profit businesses are eligible. Business must occupy at least 51% of the usable square footage of the property. The business net worth must be less than $15 million, and the net profit after tax for a 2-year average, no more than $5 million, or alternative size standards can be used with number of employees depending on your SIC code. On the second mortgage, which is the SBA's portion, their maximum is $5 million, $5.5 million for manufacturing projects, and $5.5 million for Go Green, where you're greening that property. The interest rates are below conventional rates, and they can be fully amortized with a fixed rate for 20 to 25 years. Again, on the fixed assets, 10% down for most of the loans, 15% for startup businesses within 2 years or special use properties, and 20% if a project is a startup and it's a special use property. The funds, again, can be used for acquisition of an existing building, land and new construction, refinance, building expansion or renovation, and heavy equipment. So typical criteria for the applicant, right? So we want to see that there's profitability within the last 3 years. Primarily the last tax return is where we're looking for profitability, and the interim financial statement. You may have had a loss in the last 3 years, but the 12 months plus the interim shows an upturn. Sometimes business need to diversify operations to grow or improve conditions caused by recessionary or extraordinary times, which is what we saw with COVID and the way that people needed to change their business models during that period of time. You can have personal credit dings, in your credit report, but you will have to explain them. So if there are late payments, or anything like that, we would want an explanation, but that won't necessarily, create a decline on the loan. For the collateral, so one of the main reasons for declines on a conventional side is the lack of collateral. The SBA, provides a guarantee to the bank, and that gives us that comfort if there's not a lot of collateral out there. If there is available collateral, though, the SBA will require the bank to take it as an abundance of caution. And then with the SBA, you can use projections for the future repayment. So the repayment of our loan, we can use projections. Let's talk about what you can't use an SBA loan for. So you cannot use an SBA loan to refinance debt that is about to go bad. So you can't add a guarantee to bank debt that is going to probably default. To effect a change that it will not benefit the business. To reimburse funds that the owner has put in. To repay delinquent state or federal taxes, so you can't use an SBA loan to pay back your taxes. And for a non-sound business purpose. And people ask, what is a non-sound business purpose? A perfect example is a liquor store buying a racehorse. That is not a primary use or of funds for a liquor store. It is for maybe a racetrack or for a horse breeder. So that would be a non-sound business purpose for a liquor store. So there are certain types of businesses that are not eligible for SBA. Real estate investment firms. And that's really for buying real estate for investment purposes, hoping it's going to go up and then to sell it. Firms involved in speculative activities that develop profits from fluctuations in price. So you can't buy Bitcoin with a SBA loan. Rare coins and stamps are not eligible. Same thing with art and other things that may go up in value that are just speculative in nature. Firms involved in lending activities, so banks, finance companies, factorers, leasing companies, insurance companies, and other firms whose stock is traded in money. And then ineligible businesses include those where the owner is on parole. There's a lot more businesses that are ineligible, so we'll go a little bit more in depth. Multi-level marketing is not allowed, for SBA funds, and that is products like cosmetics, household goods, soft goods lend themselves to that type of business. So, but the primary income for the business is really somebody else selling and selling down the line. So multi-level is not allowed. This should go without saying, but firms that are involved in illegal activities. Now, the SBA is a federal program, so even though the state of California allows marijuana sales, it is still illegal federally, and so you cannot use anything that touches marijuana. You cannot use SBA financing for. Gambling activities, we can't do anything for them. And then charitable, religious, or other nonprofit institutions. By definition, SBA is ineligible. And that's it.
Thank you for tuning in to Accelerate. Be sure to subscribe on your favorite streaming platform and on our YouTube channel. For more information on the Hollywood Chamber, please visit hollywoodchamber.net. Want to join us for our next HCC event? Network and mingle with Hollywood's leading business professionals, innovators, and creatives at some of the top-rated restaurants and venues in the area. Register for our monthly lunch hustle, speed leads, bash, and happy hour events at hollywoodchamber.net/events.